So how to invest in property in 2023. Now a lot has changed, the market is different, and property investing has flipped on its head starting this year. So I'm going to explain a few things that you need to know going into 2023. Also, towards the end of this video, I'm going to show you how you can get into property if you have no money. So make sure you stick around for that. Before we get into it, I'm just going to explain how the property market has been over the last 2 years compared to how it's going to be over the next 2 years. Because if you're thinking of getting into property, or you are already a portfolio owner or a landlord, then it's really important that you understand the changes that are happening, you understand how the market's going, which way it's going, and what things and what factors are going to affect your decisions over the next 12 to 24 months. So over the last 2 years, property has been in a boom. The demand has been really high, interest rates have been really low. Every time you go to view a property, there's always 20 or 30 other people also viewing the property. It's been very difficult to actually secure a property because so many people are putting offers in. You probably found that over the last couple of years, houses have gone for more than what they were listed at, which is quite rare. And this just goes to show that demand was really high. It seemed that a lot of people were getting into property, a lot of people were buying property as investments, and also it was a good opportunity for first-time buyers to get on the market because the interest rates were just so low, which meant that people could afford houses what they usually wouldn't be able to afford, and this caused a big stir, a big demand in the market. However, things have changed, and they have changed a lot rather quickly. Now going into 2023 and 2024, we are seeing higher interest rates. We are seeing affordability decreasing. People cannot afford houses that they could afford last year, for example. There are also other factors such as the cost of living crisis, energy prices, inflation. All of these things have a detrimental impact on people's affordability and people's finances moving forward. So, compared to the last 2 years, where property demand was really high, property demand has now become low. There are far less viewers and there are far less offers, which means you can now negotiate a property at below the asking price. Now we haven't seen this for at least 2 years, and the thing with property, you are either in a buyer's market or you are in a seller's market. So the last 2 years has been a seller's market, we're now going into a buyer's market, and by this what I mean is the buyer has the control, the buyer has the upper hand, the buyer can negotiate deals, the buyer can offer lower prices, and there's a good chance you're going to get them. Now on the downside, interest rates have gone up. Now what does this mean? This means that the cost to finance a property has gone up. So before you may have been paying £100, £200, £300 per month interest. Now you might be paying £300, £400, £500, even more. So on the downside, interest rates have gone up and the cost of borrowing has gone up. But on the upside, the house prices are starting to fall, and you are in a far better position to buy, and it's a lot easier to secure a property. So now that we've got that out of the way, I'm going to explain what needs to change and how we approach property going into 2023. Now the first thing is cash flow. Before, you could buy a property and immediately start making a profit month on month from your rentals as well as the capital appreciation. Now things are changing a little. As I mentioned, because of the higher interest rates, your cash flow is going to be less than it was in the previous couple of years. And to be honest, this is putting a lot of people off investing in property. It's putting landlords off, landlords are selling up. And it's just because they've had it so good over the last few years that now they're getting into an era where the amount they are making each month is becoming less and less. However, this shouldn't be something that puts you off. As I say, it's just a different era of property investing that we're going into. One of the other things which I think is important is we should be looking at property more as a long-term investment. Instead of buying a property investment and looking to cash in within a few months, you're going to be looking at a few years, especially with buy-to-let, because as I said, your cash flow is a lot smaller per month. You may only be making £100 or £200 profit per month after your expenses. However, it is a great time to buy property because, as I said, we are now in a buyer's market. And when you're in a buyer's market, you can buy property at lower prices, which means in the future, you're going to take advantage of the capital appreciation rather than buying a property in the boom period where you often pay over the asking price or you pay an inflated amount. Another thing that I think is going to be changing and something that you should consider when buying property is increasing your loan to value. Now, 25% deposit is the standard for buy to let. I think to make buy-to-let more viable, we could be looking at increasing this amount over the next couple of years to say 30 or 35%, which means, yes, you do have to have a higher deposit, but again, we are going to be buying properties which are cheaper. Another thing to consider, which is something that a lot of property investors do not do, and that is to have a buy-to-let mortgage on a repayment mortgage rather than interest only. Now, the reasoning behind this is if you can take out a repayment mortgage on your buy-to-let mortgage and have this for say 2 or 5 years, and during this time you do not make any profit, you do not expect any profit, you just basically, you're putting your money back into the equity of the property, then in 2, 3, 5 years time, that property you're going to be sitting on at least 50% equity rather than 25% as if you took out an interest-only mortgage. Because when you take out an interest-only mortgage, you are never decreasing the outstanding amount on the loan. So if your loan is for £65,000 and you have an interest-only mortgage for 25 years, you still owe £65,000. So this option of having a repayment mortgage on a buy-to-let just for the first couple of years could be very beneficial to you, because in 5 years' time, your £65,000 mortgage, for example, may now have decreased to £50,000 or £40,000, which means you have a greater equity in that property. So when it comes to renting out, you can then go on to an interest-only mortgage, and then you will then reap the benefits of the higher cash flow, the monthly profits, and the house has probably gone up and you've taken advantage of the capital appreciation. So I know a lot of people have said that 2023, property's dead, they're getting out of the market. I really don't think that's true. I just think we just shift, the era changes, things change, things move. We just have to adapt to them. Now, there are other strategies such as flipping property. Now, another thing to be aware of is that the capital gains is reducing after April 2023, which means that when you sell the property, the profit that you make on that property, you're going to have to pay more capital gains tax because your allowance is decreasing. So please be aware of that when flipping property. Also, other strategies such as HMOs and serviced accommodation. Now, I do think serviced accommodation will become more popular because travelling abroad is becoming more expensive. Therefore, people are more likely to take holidays and vacations in this country. However, with the energy prices going up, it could be a concern, it could be a problem that you're paying a lot more in energy bills, especially with serviced accommodation, because people tend to just go out and they don't care, leave the lights on, they'll leave the heating on. Maybe if you have a hot tub or something, that'll be draining the electricity. So that's something to be aware of. Now, as I said at the start, if you're looking to get into property this year and you don't have any money, then please go and check out my free property course, which I have created. The link's in the description. You can also follow me on Instagram at J9Property, and I'm also going to be explaining how people can start in property without any money. And I'm also really excited to announce that the J9 Property Academy is coming very soon, and within that academy I'm going to be showing you exactly how to start in property with zero money, how to raise your own money, to build your own funds, to build a deposit to allow you to then buy an investment property. Now, it doesn't involve joint ventures, it doesn't involve deal sourcing, doesn't involve using your auntie's money or anything like that. So please make sure you keep your eye out for that. I post probably every day on Instagram, so make sure you follow me on there for lots of tips and updates. And I hope you enjoyed this quick video. I'm Jason, and I'll catch you soon.